In this video, we'll be taking a look at a few chart analyses to get you prepared for the week ahead. If you love the content as usual, please like, subscribe, and leave your thoughts in the comment section down below. And if you're interested in learning trade forex like a professional, check out our complete forex trading course on Udemy. I have the link attached in the description below. So what we have on chart right now is a gold chart on a 4 hours time frame, and we are going to continue from where we stopped last week. So last week we drew this ascending channel, anticipating a bearish breakout from the lower bounds of the channel, and we had that last week, right? So if you measure the price movement from this bearish breakout to the downside, is approximately 350 pips. So congrats to those traders who were able to take advantage of this trade opportunity, right? So on my screen here, I'm simply going to show you where I'm bearish on gold, because right now I don't see any reason to be bullish. Okay, so there are two important price levels I want to bring to your attention, because those are potential levels where we could see a sustainable price reversal to the upside, right? So the first level is over here. So this is a slight consolidation, acting as a small support for all we are this pull up to the upside. So this could act as a support level. So if this doesn't hold, then we're going to watch out for these price levels, right? Because we have used level as a support level before, turn into a mild resistance level, and now we're going to see what price does when we get down here. So I'm going to go down to the 2 hours time frame to show you what I'm watching out for to take a trade on gold to the downside, right? So remember, I trade following continuation pattern, especially when we have a bearish move like this. So I'm simply going to wait for a consolidation and a bearish breakout at a sign of a continuation to go short. So when this happens, I'm going to go short at the breakout, and my stop loss is going to be above the highs of the consolidation that leads to the breakout. And first target, as I explained earlier, is going to be around these lows. Second target is going to be around these lows, right? So this I'm going to trade gold for now. So right now I'm simply not being bullish on gold. So I think there's still a good chance we head to the downside before we see a sustainable bullish rally on gold. So that's it briefly for gold. Moving on, talking about GBP-USD. So we also talked about GBP-USD last week, but unfortunately our expectations didn't play out as we anticipated, right? So we anticipated a retest of these highs followed by a rejection or a consolidation and a bullish breakout or a bullish continuation, but we didn't get that. So this is exactly what I was warning us about last week. So we fell back below these highs, creating some sort of bearish pressure to the downside. So I'm going to get rid of this value because that seems irrelevant right now. So I'm going to be slightly bearish on GBP-USD because this simply seems like a bearish continuation right now, right? So you can see massive decline and a consolidation. So I was hoping we get rejected by these highs here, helping the price go higher. But right now it seems this resistance level couldn't hold, and we are currently trading back below these highs, right, where we had this massive breakout from. So this seemed like a bearish continuation pattern in which we are going to wait to see if price breaks through this support level. So something like this. So this is what I'll be watching out for on GBP-USD to take advantage of this price action. All right, so I'm going to go down to the 2 hours time frame so this is clearly visible. So as you can see, consolidations helps us get a better risk to reward ratio. So that's why I'm waiting for a consolidation like this, something similar to what we have over here, and then a bearish breakout, right? So this is what will give us our confirmation to go short. So entry is going to be immediately after the breakout. Stop loss is going to be above the consolidation that leads to the breakout, and I'm going to trail my positions as we go lower, right? So the reason why we wouldn't be waiting, let me speak for myself. The reason why I wouldn't be waiting for a retest if this happens is because we would already have had our consolidation, so there's no need to wait for another confirmation. So the only scenario where I wait for confirmations like retest or another consolidation is if, for example, we go straight down breaking this area of value. Then I'm going to wait for a confirmation from a retest and then a follow through, right? Or I'm going to wait for that breakout, a consolidation underneath the breakout, then followed by a move to the downside. So my entry is going to be here. Stop loss is going to be above the consolidation leads to the breakout, and then I'm going to trail my position as we go lower for take profit targets. So this is how I trade. I follow up with these patterns and consolidations and retest to give me the best trade opportunities. And if this doesn't happen, I simply just stay away from the chart. So that's it briefly for GBP USD. Moving on, we'll be talking about US100. So this is Nasdaq. So this is a Nasdaq chart on the daily time frame, and I've discussed about this several times over the past few weeks, right? So we had a massive bullish move, and we had this huge consolidation within this channel, and now we've had a confirmation of a bullish breakout. So this is a confirmed bullish flag, right? So we discussed about bullish flags on our Instagram page if you follow up with our content. So bullish flags are only confirmed when we get the bullish breakout, and we seem to have had that last week. So I'm going to go down to the lower time frame, so 2 hours for example, so we can spot out good trade opportunities for the week ahead. So this is something you shouldn't miss, right? So yes, so last week I talked about the possibility of a breakout followed by a retest, and we had exactly that to the letter, right? So if you're going to take advantage of this trade, if you have a good risk to reward ratio, or risk management, excuse me, you could equally jump into a trade over here, and your stop loss would have to be around these lows. I wouldn't recommend this to anyone, no matter how big your trade balance is, right? Because the best trade ethics is to get the best trade positions, right? The best possible trade position, the best possible entry to give you a better risk to reward ratio. So if you're going to jump on a trade around these highs, stop loss would have to be approximately 500 pips, which isn't an ideal price level to set your stop loss, in my opinion, right? Because that's just too wide. So what you do is simply take these lows, right? Because these are the immediate higher lows. Okay, so you take these lows coupled with the fact that we're currently trading around a resistance level, right? So I'm going to show you that real quick. So this is our resistance level over here. So these highs currently acting as our resistance level. So this is something you have to pay attention to. So there's a good chance we get rejected, right? So we may get rejected all the way down to this price level, touching this trend line, where you could look for an opportunity to go long, right? So stop loss would be below the retest. So it could be at this price level, it could be at this price level, wherever it touches the trend line. So your stop loss is going to be below the bounce off of the trend line. So this green trend line, I'm going to zoom in a little. Yes. So remember, we are connecting these lows, right? 1, 2. So if we get a bounce on this trend line and a reversal, right? So it touches the trend line and reverses, you get your entry for a long position because we're clearly trading above this channel, right? After having a retest over here. So your stop loss is going to be below the below the candlestick that leads to the bullish bounce, and your entry could be after the bounce. Then your first target can be around this highest, and trade the rest of the positions as we go higher. So this is one way in which I'm going to play this scenario, because we seem to be too far away from a significant area of value for us to place our trade. So the second case scenario for a bullish position is waiting for a consolidation around its highs. So waiting for a good consolidation around its highs, followed by another breakout. So this is going to be my most preferred case scenario to go long on Nasdaq, right? The reason is because it gives the market enough time to think about where the market is going to head, and if we get a consolidation and a bullish breakout, then that's going to give you a better risk to reward ratio, because entry is going to be immediately after the breakout, because your consolidation is going to act as your confirmation. Stop loss is going to be below the consolidation, right? Below the lows that leads to the to the breakouts, right, during the consolidation. So this we have marked out on the chart, and your take profit, first take profit obviously is going to be around these highs, because we clearly have another resistance level here. Second take profit target can be around these highs, while you trail the rest of your positions as we go higher. So this is briefly for Nasdaq. I don't see any reason why I'm going short right now, because like I showed you earlier, on the daily time frame, we simply just broke out from a long-term bullish consolidation, which is a bullish flag. So if anything changes, I'm going to update this chart in our Discord community or on our Instagram page, so do it to follow us. So if you're not part of our Discord community yet, use the link below to join our Discord. It's totally free. Moving on, we'll be talking about crude oil. So crude oil is something we'll be following for a few weeks now, and we seem to have had a significant decline to the downside, as expected if you follow our weekly analysis, right? So right now we seem to be trading around this area of value. I do think crude oil is going to experience some more decline, right, because of the supply chain issues with Saudi Arabia, producing more crude oil. So this is going to affect the price of crude oil greatly, and I think we are going to head lower. And this is what I'm watching out for us to go lower, right, or to get a bearish trade opportunity. So right now, I'm going to simply wait for a retest into this area of value. You can see we have these lows here acting as a support. So if we do get a retest into this area of value, I'm going to watch out to see what price does. Hopefully, we get a bearish continuation chart pattern. It'll be a bearish flag, symmetrical triangle, ascending triangle as fast. After that consolidation, we do get a bearish breakout. That will be my signal to go short. So if we take the lows, entry is going to be just at the break of that chart pattern. Stop loss is going to be above the highs of the consolidation. Take profit is going to be around these lows over here. So over here is going to be my lows. So I wouldn't be holding the trade all the way down to these price levels, right? Because this is going to be significant. I would have made so much profit already. I won't need to hold the trade any longer. So this is just one case scenario, right? So if you get rid of this area of value, so I'm going to put it back, you see this just simply gives us a bearish continuation pattern. So you can see the ABC formation, 1, consolidation, and 2. So this is the ABC formation if you are acquainted with Elliott wave. So this is going to be one scenario to go short. So alternatively, I'm going to put back our area of value. You can see we have a resistance level here, turn into a support level. Now we seem to be coming closer to that price level. So this is what I'll be watching out for to go short, my alternative case scenario, right? So I'm going to extend this a little, and here we go. So I'm simply going to wait for a consolidation on this area of value followed by a bearish breakout. So if we get a consolidation on this area of value, which means this area of value is going to be acting as a mild support, then I'm going to go short when we take out, eventually when we take out our support, or if we do take out our support. Stop loss is going to be above the consolidation that leads to the breakout. Entry is going to be at the breakout as I've illustrated here, and my take profit is going to be around these lows as I said earlier, right? So this is going to give you a better risk to reward ratio, because at least you have a confirmation that we've taken out this area of value. So this is briefly for crude oil. If anything changes, if I anticipate a bullish turnover, I'm going to send those updates to our Instagram page, right? Or I'm going to update those charts on our Discord. Lastly, for today's video, I'm going to talk about US30. So this is something I also discussed about last week when we talked about Nasdaq, US30, which is Dow Jones, and the S&P 500. So right now, US30, similar to what we have on Nasdaq, seem to be itching towards taking out this trend line, right? So we bounced off of this area of value, support level, and we consolidated around this area of value, support, resistance, consolidation. Now we seem to be having a breakout to the upside. So I'm going to go down to the 4 hours time frame first for us to clearly see what's happening down here. Now, right? So this is what we have on US30. Okay. So this is a sign of a bullish momentum, an incoming bullish momentum on US30, right? Similar to what we'll be expecting on Nasdaq. So we have this consolidation, and we seem to be having a bullish move, but we haven't had a significant candle close above US30 right now. So I'll be watching out for something like this, maybe a slight retracement to the downside, consolidation, and then a proper breakout to the upside. So if this happens, my entry is going to be above the breakout. Stop loss is going to be below the consolidation that leads to the breakout. First target obviously is going to be around its highs. Second target is going to be around its highs. And if you have more positions to hold, then you're simply going to trail the rest of your positions as we go higher. So this is how I'm going to trade US30. No rocket science. I think this self-explanatory, right? Because we have this massive bullish move. A consolidation means market is deciding where we're going to head next, and if we do get a massive bullish move to the upside or massive bullish breakout, taking out this area of resistance properly and also taking out this trend line, that's going to open up opportunities to go long, which I would be taking advantage of, as I've explained a few minutes ago. So that's it briefly for this week's analysis. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. If you're interested in learning to trade Forex like a professional, Check out our complete Forex trading course. I have the link attached in the description below as well. And if you're not part of our Discord community yet, it's totally free to join. Use the link in the description below. That's it from me, guys. See you next week.